the sale, if it's the right deal, is I'm here to make you money. If you don't want to make money, that's fine, but I'm here to make you money. And all I have to do is convince you that this has the right risk reward formula.
Your network is your net worth. Come listen to some of the most successful people I know share invaluable knowledge, stories, and advice in real estate, business, and beyond. This is Weiss Advice. Whether you want to take your business or personal life to the next level, look no further. Welcome back to another wonderful episode of Weiss Advice. I'm your host, as always, Yona Weiss, and with me today, I have a very special guest. We have Meir Fried from Lightwater Capital. I am very excited to be talking to Meir today because when we met in person for the first time after many phone conversations over the years, we finally had a chance to meet in person a few months ago, and we couldn't stop talking. So I'm a little upset that this episode will only be a half an hour because who knows how long this can go. But without further ado, Meir, how are you today?
Yona, it's great to be here. Great to talk to you. The pleasure is mine. I'm flattered that you felt I was worthy to have on the show. I'm doing great. Thanks for asking.
Well, if you guys don't know this already, and you can't tell, he's very humble, and his reputation precedes him because he and his partner, Joe Wasser, have combined to buy over $250 million in multifamily real estate over the past 2 years. So that's pretty good for a couple years. And he's been in the industry for close to 10 years now and has a great insight on a lot of different things related to real estate and the ins and outs, underwriting, and everything in between. So I'm just excited to see where this conversation is going to take us. Where do you think it should go, Meir? I'll let you lead the show this time.
Well, I guess the question is, what do people want to hear? I have a lot to say. Typically, friends of mine never fail to remind me of the fact that I have a lot to say. A couple of years back, I actually made a bris for my son in the evening. It was on a fast day. And I decided that instead of asking my father-in-law to say a few words because it was a sit-down dinner. So instead of asking my father-in-law to say a few words, my father, and then having myself, people don't want to hear that much, that many speeches. So I decided I would just speak myself 2 or 3 times. And the head of the biggest school in the community, Rabbi Yaakov Bender, showed up in the middle of the main speech, and he was sitting for a few minutes and a few more minutes, and then he turned to someone else and someone sitting next to him and said, "Does everyone do this in this community? This guy's going on and on. This isn't." And they said that I had spoken for about 45 minutes straight, and that was a monologue, and that was part 2 of the evening. Definitely more enjoyable to speak to someone, but
right.
Absolutely. I'm with you all the way on.
So I'll throw out a question there, and we'll see where this goes. I mean, you've been in the business for a while. You've seen some changes over the past couple of years, right? Obviously, COVID threw a big wrench in a lot of people's deals. You guys are still buying, and throughout COVID, you guys were buying and underwriting deals and closing on deals. So my question to you is, did you see anything during that time that actually, changed the markets at all, or is things going the same?
Excellent question. So we always give a lot of thought to what's going on, what was happening in the past 3 to 6 months, what was happening over the past 2 to 4 years that has changed, and what do we anticipate over the next 3, 6, 12 months, up to 60 months. And we always have our ear to the ground. And during the COVID process, it was actually a tremendous learning curve. So a little background about my partner and I. We were in this business doing third-party management. We would buy deals here and there, small deals locally in the community, teaming up with a singular investor. And it was about anywhere between $200,000 and $500,000 down payment on a deal that ranged from $1 million to $3 million. We went all the way up to 10 million once, but that was really our bread and butter. It was primarily third-party management, and then buying deals on the side as some sort of a supplemental income. And then at some point, we decided that we really need to scale and we need to focus on deals that are significantly larger. And that was right around in the middle of 2019. But being that we're very diligent and very methodical, we decided that we weren't going to just jump into something that was different. In New York, the deals typically are smaller unless you're dealing with the really, really big boys in the office buildings in Manhattan and such. So we took our time and we went out, and it took us a while. We went from market to market to find something that we really liked, that we were really comfortable with. And finally we found a deal. It was a high risk deal, but we were management guys. So we were excited to take on like the biggest challenge, even though it was the first one. We knew how to do this. 50% vacant, really good basis, numbers looked great. And we had everything lined up and it was great. And the month was February 2020. Right. And we had put the deal on the contract. We were so excited. And we even brought on a lead investor who was going to partner. And it was, we had set up the equity stack, debt, equity, perfect, beautiful. What could go wrong? And I remember it was quite prescient that our lead investor made a comment at the end of our meeting saying, "I love you guys. The deal looks great. Just one little caveat. I'm in unless this virus across the world in China, which they say is going on. They don't know what to expect. If it doesn't turn the world upside down, I'm in." And then it was a week later or 2 weeks later that the world shut down. And that was a difficult pill to swallow. All the banks pulled the loans, and ultimately we parted ways with a reasonable settlement. So the whole world shut down, and we decided it wasn't the right thing at the time to purchase that particular deal. It was a super high risk deal. We lost some money, part of the game, but we recouped, and collectively we had made a decision that this is an uncertain time. But it doesn't mean that life is not gonna just fall apart. People still need a place to live. People are scared, but what's set to happen over the following 3 to 6 months? There's pent up energy. People have been given money from the government. They're at home. Investment has stopped. And we had really discussed over and over and over that this is really a very opportune time where values can just skyrocket. And we had conversations about how the natural thing that should follow is that cap rates should compress, because as volatile as the real estate industry was, the stock market was that much more so. And we had people calling us regularly saying, "I can't have my whole life savings in the stock market. I want to pull out and go into real estate." We had people in healthcare, because all the way in the beginning of COVID, people weren't sure if healthcare was going to swing one way or the other. People thought their businesses were going to collapse. And I had some healthcare guys coming and saying, "I'm liquidating everything. I want to team up with you and get into multifamily real estate, because it's an area where if you do it right, people always need a place to live. It's very, very stable, and people were looking for that stability." So we had a certain forecast where we expected that cap rates were really going to compress and values would go up. Unfortunately, we did not have the capital to buy $1 billion worth of real estate at the time.
A quarter of that, not bad.
A quarter of that, yeah, but it would have been nice to put together like $1 billion in 2020. That would have been really, really great, because from the deals that we did put together, like I mentioned, our largest deal prior was $10 million. So that was really where we wanted to focus on, between $10 and $20 million. Towards the end of 2020, we put together 2 deals, $11 million each, and we were very comfortable with them. We were very excited. There was all this risk in the contract because people didn't know if the mandates were going to be back on, back off, if people were going to vacate, if occupancy was going to drop from 95 to 70. Nobody knew what was going on, and sellers did not want COVID to disrupt the contract. So we had all this language negotiating back and forth. It was very chaotic. But we closed on those 2 deals, and today we have both of those deals on the market. We have offers actually for both of them. One is selling for $22 million, and the other one is selling for hopefully just over $20 million.
That's
crazy. So it's wild. And I tell all my investors, this is not skill, this is luck. We're going to make money in the long term because we're skilled and we're really, really good at what we do. And I'm very proud of the work that we put in and our know-how of the industry, but this is not skill, this was luck. My hope is that an $11 million deal could grow to 15 or 16. That's forecasting, understanding the market. When in the matter of 18 months, it goes from 11 million to 22 million, pinch yourself and, go home and make a l'chaim.
That's great. That's a great story. And it's incredible how unpredictable that things have become. So
Right. So just to your question, through COVID, we saw opportunity, and we decided that we want to be very, very aggressive in capitalizing on those opportunities. The opportunities have changed. A lot of people, I know Ralph Hertzka says not at every event that he speaks at, but probably every other event, that someone told him in the late 80s that the real estate market is just too saturated and there's no money to be made in real estate. The values are just too high. That's what someone told him, sagely advice back in the 1980s. So, I know that from the time that we were doing these little deals, everyone was always saying that, oh, it can't go any higher. Can't go any higher. How could you buy today? I bought 4 years ago at this and this price. And what we found over the years were that the people with that attitude were just frozen. They were frozen in fear. They were stuck in a time capsule of what values should be, and they couldn't disconnect. It was an emotional thing. So our attitude always has been that even if it feels strong, if you're underwriting well, if you're disciplined, you make sure you don't just chase the high values because you can sell it later. You stick to deals where worst case scenario, you hold on to it for 10 years. If your investors could be happy with the 10-year hold period and the profits that the deal will throw off operationally, then you're in good shape. And then the rest is just a cherry on top. Yeah. So we stay disciplined and we look for our opportunities. And in times of uncertainty, like especially now, I don't know if you saw, I posted on LinkedIn last night. What do people think of rising interest rates and the fact that they're rising sooner, faster than we anticipated? For the whole year, pretty much since, from when things got active again in, let's say, the summer of 2020 through now, while interest rates were still extremely low, every single guy and their mother was saying interest rates can't stay so low. They're going to rise. Right. So if you knew they were going to rise and now they went up, why is everyone surprised? Right. Like, isn't this what we were waiting for? Like, didn't we know? Everyone was saying, so what happened? Everyone said it was going to happen, but secretly we were just hoping, oh, maybe they'll stay at 3.5% forever. But that rise in interest rates has been in our model. We anticipated that they were going to go up. Some of our deals have fixed rate financing. Some of it has floating. But even in the deals that have floating rates, our expectation is, look at the opportunity. People are freezing because of this volatility. But what about the fact that rents are still surging? So do you want to be left out in the cold because rents go up 5%, interest rates go up, 150 basis points? That spread of, that arbitrage of 350 basis points is just done because you froze because they went up once. So just the times are changing. It's a very interesting time. People who aren't disciplined might get wiped out. I don't know. I hope not. I hope everybody really does well. But it's a very interesting time. Things are changing, and we always felt like if you're gonna be too scared, if you're going to be too cautious, if you're gonna be that cautious investor, the cautious investors need to put their money in bonds and sit on the sidelines. And that's just an attitude that some people have, and those people tend not to capitalize when the opportunities come knocking. Yeah. So even if it's maybe a little bit more aggressive than we should be, a tad more aggressive than we should be, that's a risk we have to take. And we feel like, we're managers, we know the business. And if we take these risks, we'll be compensated just like we were when we took those risks smack in the middle of COVID. Right. Absolutely. And obviously it's calculated, like you said, you're doing the deals, and you see a lot of people getting involved in real estate over the past few years, just like yourselves. And even throughout COVID, obviously changes are always going to happen. And the best time to invest is now, right? Or was, 10 years ago, but the second best time is now. The best time was always 12 months ago or 36 months ago. Oh, the prices then. Okay, so go back in time and invest. But otherwise, just make sure you're not saying that again in 36 months from now, because fool me once, shame on me, fool me twice, fool me once, shame on you, fool me twice, shame on me. But either way, it's shame on me. Yeah, you only have the present, act or don't act, but either way, people will complain. So all good.
Yeah, 100%. What's your favorite part? Obviously, you said you focused a lot on the management side of things. You're involved a lot in the investor relations side of things as well. What's your favorite part, if you could put something on that about the real estate investing?
Oh, sure. So I would have to say my favorite part is really interacting with people. And probably the highlight of this kind of work is the fact that you get to deal with high net worth individuals, and you're not selling them something at their expense. The sale, if it's the right deal, is I'm here to make you money. If you don't want to make money, that's fine, but I'm here to make you money. And all I have to do is convince you that this has the right risk reward formula where we recognize the risk. It's not zero, right? If I'm telling you the risk is zero, then don't trust me with anything. There's a risk, but this is what the risk is. And the upside that we have, it's just a favorable formula. It's a risk reward ratio where the reward outweighs the risk. And because of that, I'm sure I can't imagine that my next deal will go sour, but I'm sure over the next 100 deals that I do, one of them will pan out. Probably one is the right number. So we have to recognize that risk. But over time, any of our investors who regularly come in with us, they will see that our upside is going to far outweigh any of the risk that comes along with it. So conveying that message it's very thrilling, especially when they're asking questions and we have the right answers to their questions, and knowing that we are comfortable in our craft. My partner and I have very different values that we bring to the table. So there's no butting heads. We have a mutual respect where he's a lot more on the ground and he can handle the tenants and the management and the day-to-day and the operations better than anyone I know. And when it comes to sitting in a meeting and going through the numbers, it's thrilling when you pitch someone and they say, okay, I want to put $2 million with you guys. There's no feeling like someone saying that I trust you with $2 million. It's a lot of money. And when someone trusts you, it's very validating, obviously. The flip side is, and I'm still not sure why I guess I have an idea of why this happens, but anytime we get a rejection, even on the most neutral, polite, nice kind of level, it feels like a blow to the stomach. It's like we had an investor that said, sorry, we can't come in because we have a policy that we only invest with one sponsor in each region, and we already have a sponsor in that region. So thank you for sending, but we're not going to be able to take this deal. And for me, it was like, I can't believe it. Can't believe it. We can't believe he didn't want to come in with us. It's like rejection at the most core level. But they go hand in hand. So the thrill of winning and getting someone to commit to us and invest with us is really, really exciting. And when you have a deal where you're coming in guns blazing because this is the right deal, like this deal, we're hitting the metrics, we're conservative in this respect and that respect, and we put in the cushion and we know this might go wrong and that might go wrong, but we're still showing a good return, and we're showing good returns on conservative expectations that that really are going to be even better, and we really believe it'll be better, but we like to temper expectations of our investors. And then they come in with a question of, well, why did you do this and why did you do that? And getting into the nitty gritty and showing that it's not just, we didn't just hire someone to put everything on a spreadsheet and say, we think it'll be worth more tomorrow. We really went through every single variable, every expense of what can get out of whack, where we're exposed. Can the taxes jump up? Can insurance get out of hand? Lawsuits, the demographic, and the vacancy drop, all these things. And when you have an educated investor who really rips through it line by line, and we'll get that sometimes. We'll get a request of, I had my analyst go through it, and here's a list of questions. Like
right.
17 questions, very, very detailed. And it'll take me an hour, but we go through and articulate, like for every one of his one-line questions, I have like a 10-line, whatever. If you're going to ask me detailed questions, just be ready to read the answers because, But yeah, it's really, when you get into it and your craft. I heard a great saying from Mark Cuban recently. he said that when people go into business, they're very often obsessed with what's their passion. What's their passion? They want to find something that they're passionate about.
Right.
He said, throw that all out. It's nonsense. You know what you're passionate about? You're passionate about something that you're good at, because everyone has a passion to be good at something. So if you find something that you're good at, get into it, because you're going to love it, because everyone loves to be good at something. And if you have a chance to become a master of your craft, there is no better feeling than showing off your craft, saying, this is what I bring to the table. This is me. This is how I know. This is why I know. This is why you could have faith in me. And someone saying, you know what, that makes sense. And just to end my, my responses are generally like we mentioned a minute ago. I tend to just ramble, and my wife tells me that all the time.
What are you talking about? I don't see that at all.
Just to add one more small point to that, very often, like one of my key pitches, and we've had this as a policy in the company, is that anyone who's coming to look to invest, we'll ask them to take the number that they were thinking of investing, divide it by 405, and then and put that, for a start, put in a much smaller number, because we could be salesmen. We're good at what we do. We know the lingo better than whoever we're meeting with, who's not a professional in the industry. But don't trust me because of what I say. Trust me because you experienced it. And the reason that sells is not because they have the time to wait 3 to 5 years to go through the entire cycle. The reason that sells is because it's genuine, and people could tell when you mean it. And this is why every single day I walk into the office and I have a fight with my analyst that he says, we find this deal that's pretty good and that deal that's pretty good. I know it's not as good as you normally like, but we could probably raise the money for it anyway. And I always tell him, unless I'm convinced that I could put in every dollar from my bank account into this deal, unless I believe it at that level, I can't sell it, because I'm just going to lose the tone in my voice. I'm going to lose the energy. I'm going to lose the excitement. And people can tell, because the truth sells. Being genuine sells. People appreciate it. And they may not be able to pinpoint it, but the comfort level develops when they can tell that you mean what you say.
100%. I couldn't agree more with that. And I love the point you made from Mark Cuban also about doing something you're good at. And that's really, you become passionate about it because everyone loves being good at something, and being an expert at your craft is enjoying. I mean, just to be honest, I love podcasting. I love the thing, I always say, if I could just be paid for doing this all day, like I would. So yes, it's true that kind of, a roundabout way, it helps towards the business that I do and stuff like that. But if I could just sit on the, be like a radio host or something like that, I'd definitely do that. So if anyone's listening out there that has any connections.
So it's funny you say that, because I thought that, and I know you for years and years, the famous Yonah Weiss. I thought you woke up one day and you're like, oh man, I just love cost segregation. This just speaks to me. I can live for cost segregation. Going through the line items and speeding up the depreciation.
Of course.
What's better than
honestly, when I was a kid, I always wanted to be a cost segregation expert. Like that was always the goal. And I'm very blessed to be to live out the dream.
I'm sure your first grade teacher, when she asked you, what do you want to be when you grow up? And you said, I want to be the king of cost seg. I'm sure you got a plus 10 on your test for that.
Yeah. Look at me now. Meir, I want to transition now to what you call the final four. These are 4 questions I ask all my guests. First question to you: what is the worst job that you ever had?
So the worst job, this is going to be a little bit embarrassing. I was in a camp, and I was there for a couple of years, and I thought I deserved a promotion. I was young and stupid. Not that stupid, not as stupid as other people, because I'm a lot smarter than the other people in the camp, obviously, but stupid, relatively speaking. And I felt like I deserved a promotion. I wanted to be the division head, but the head counselor and I did not get along that well. We were okay, but clearly he had different intention, and he wanted me to be a counselor. And I said, I don't really want to be a counselor this session. I've been here so many years. So he clearly 2 egos were butting. So he said, well, what do you want to do? Be transport? And transport was the guy who has the golf cart who drives people from point A to point B. And I said, yeah, I want to be stick it to you. I want to be transferred. So for the last few weeks of that summer, That was my job, to have a golf cart. And turns out that the camp had like 2 or 3 golf carts, and my golf cart was broken for like 70% of the session. So I didn't have a job. I was unemployed. I was just roaming around camp because I was transport, but couldn't drive anyone from point A to point B. So it wasn't the greatest of times, but sometimes you get what you bargain for.
That's funny. That's a funny story. A very funny story. That's great. So second question, third, fourth, I don't know what number we're up to. I lost my train of thought there with that story, but the second question is, what's a book you've read that's given you a paradigm shift?
So I know, as a Orthodox from Jew, I'm supposed to say one of the Sfarim that we're taught from when we're very little, which is true. And I could probably go through a bunch of them that were very, very invaluable and different teachers. But as far as, just a paradigm shift, it's the perfect word for that question, because there were 2 books that I read in pretty quick succession. First was How to Win Friends and Influence People, which was very popular in my school, and everyone was all excited. We're going to figure out how to influence the world and get everyone to do what we want. And it was an interesting book. And then I read another book, which is also pretty popular, probably not as popular, which is called The 7 Habits of Highly Effective People. I imagine someone else must have had that suggestion on this.
Yeah, both of them have been brought up before, but yeah.
And what I was fascinated by was that in about 1 page, all the way in the beginning, Stephen Covey of 7 Habits and Highly Effective People dismisses the entire concept of how to win friends and influence people as manipulative and something you should not get involved in. And instead, he proposes a more thought out approach, which is being genuine. And instead of trying to find what people like so you could get what speaks to them, so you could get them to do what you want, try to develop in yourself. Don't try to change other people and get them to do what you want. Try to change in yourself how you see the world. And if you could see it from their vantage point, if you could develop what he calls a paradigm shift, quite appropriate for your question, and see the world the way another person sees it, then you'll discover that you have a lot in common with those people. And it really just allows for long-term relationships based on genuine feelings. If I can see the world from your vantage point and understand how you see things, we'll very soon discover that we have a lot more in common than we have, that we have that's not in common. And it really just allows for very honest and open relationships, and living your life in a way where you're not worried that you're going to get caught, or someone's going to see that you're a fraud. It's just a very, very easy way and very calming and peaceful way of living life. I remember recently I was I opened a Zoom meeting, and it was my turn to share my screen, and one of my friends said, "Meir, you did something. You missed the boat on that. When you open your screen, you have to make sure that all your tabs were closed. Who knows what kind of tab you have open, and now you're going to share it with everyone in the meeting." And I said, "Max, I never have any tabs open that I would be embarrassed to share on the meeting." And that was kind of telling in the relationship between me and that associate. But it's very comforting, and it's very, I'm not saying that it's easy necessarily, but again, just being honest and doing things where you could learn someone else's vantage point and have nothing to hide and just be open really, really helped me change the way I see things. And, it's even till this day, my wife tells me all the time that if the babysitter is asking for more money, babysitter came late, I'm very quick to say, okay, brush it aside. No big deal. She deserves it. She's coming from a place where, maybe she was late because she had this excuse or that excuse. Like, let's not dwell on it. Just try to see, where she's coming from and move on.
Absolutely. The inside out approach works much better. Yeah. Both awesome books, but appreciate the 7 habits. Definitely been brought up before. Third question, what's a skill or talent that you would like to learn?
A skill or talent that I would like to learn. There's a bunch of ways I can answer this. What comes to mind initially is fencing. Even though it's not very practical. I'm not even sure how much exercise you get from fencing. But that was something that for some reason, it's one of the age old, people have been fighting with swords ever since swords were created, which I think probably like one of the first things that were ever created. But I believe I had a better answer for this. I was told coding is really important nowadays.
Right.
But I'm pretty comfortable. Like the way I see these kind of things is if there's something out there worth pursuing, I try and pursue it. And otherwise, I'm happy without it. So, to answer your question, it depends how old I am. I guess today I'd probably like to be maybe better in coding. I'd love to be in the NBA, although I'm past my prime. I'm turning 35. That would have been really, really fun. I really thought at certain points that I would make it to the NBA, but
like as an owner, you mean?
So that's the plan now. That's the plan now. But to play in the NBA would have been really fun. They don't you don't really find short Jewish boys playing in the NBA, but that would have been nice.
Right. Yeah. Absolutely. Definitely what to strive for.
Exactly.
Fourth and final question. What does success mean to you?
So this is a great question because for many years now, I've been caught up in this cycle, like this never-ending cycle of, so what would happen if you made $1 million tomorrow? If you're in real estate, so sometimes if you're doing okay, if you're doing well, that can happen. And the minute you find that $1 million, you obviously put it into real estate.
Right.
Okay, so let's level up. What happens if you make $5 or $10 million tomorrow? Okay, same answer. Put it into real estate. So where does this end? Does it end with 50 million? Does it end with 100 million? Is it 3 billion? At a certain point, it's just a big game, and it's a never-ending game. So ultimately, what is the goal? And I think the answer to the goal is that success is not how much money you have. It's a little cliche, but to me, success is utilizing your time as efficiently as possible. So for some people, the paradox that I find with this kind of question is, some people could strive to make $10 million or $100 million, whatever it is. And they could do a lot of good with that, with that money.
Right.
A lot of good. They could feed a lot of hungry people. They could enhance education. They could do all sorts of wonderful things. And those are, dreams of grandeur, which are wonderful. Is that impact more significant than the impact that a singular teacher could have on a singular student?
Mm-hmm.
I don't know, because in the grand scheme, it seems like a lot of glory, but when you boil things down, the impact that one person can have is really, really tremendous. So, to me, success means having the stability where I'm not concerned, I'm not worried, where's my next meal going to come from? Where's my next mortgage payment going to come from? And if I'm worried about next year's finances or 10 years from now's finances, then it just goes to the next generation. Okay, I'm good for the next 50 years, but what about my kids? Oh, I covered that. Well, what about my grandkids and their grandkids? So it could really drive people mad. So I think people really need to take a step back and try to figure, what are we striving for, and what is success, and articulate it. Clayton Christensen, who was he was a Mormon professor. Are you familiar with Clay Christensen?
Oh,
he was phenomenal. You should check out some of his videos on YouTube. He actually died within the past few years. He was a professor of business at Harvard, and this was his central point of how do you define success. And success in his life was his morals, his time with his family, the basics, but he clung to it. And anytime he had a job and that demanded that he blur those lines, he was a rock. And he gave essays and seminars on this. He eventually at one point he had a stroke and he forgot how to speak English, and he went to the local airport and he bought Rosetta Stone to learn English from scratch. But he was like a fascinating individual. And it was really these basic ideas of, we don't want to be miserable. We don't want to worry about where our next meal is going to come from or where our next mortgage payment will come from. But it's critical to understand that my time is limited. No matter how much money I have or how little money I have, the time is finite, and you only get one shot at the next moment you have in life. So make it count. And for me personally, that means working a portion of the day, spending time, setting time aside, spend time with my family to study, be involved in godly pursuits, things like that. And just finding the right balance. So to me, that's the day I look forward to, when I could slow down my schedule a little bit more than it is now, and really enjoy using my time, to the maximum level of efficiency.
Love it. Amazing answer. Very well thought out and well articulated. So appreciate that, Meir. Where can our listeners find you or reach out to you?
They can find me or reach out on my website, lightwatercapital.com. I'm also on LinkedIn. I respond to direct messages. I try to be a bit of a private person. If you meet me in the street, you'll probably think that I'm upset about something, or that I don't want to. And that's usually because small talk just doesn't work well with me, unless you're a great guy like you, Yona Weiss. But I try to keep an open dialogue, happy to help wherever I can, wherever I have expertise or anything like that. Always an open book, and happy to make new relationships. And if I can't further my career, if I could further someone else's career, even if there's nothing in it for me, that's fine. Trying to do the next right thing.
Awesome.
So please reach out to me.
All right. We'll make sure to put that in the show notes. It's been a pleasure. Meir, thank you so much for joining us and spending the time with us today. And to our listeners, thank you all for listening in. And I hope you got something out of this episode. I sure did. And remember, the best advice comes only when you ask. Real quick, I have one question for you. Did you like this episode? If you did, I want to ask you a huge favor. See, the biggest thing that helps this podcast grow and that will spread this message to the whole world is that if you leave a review, a rating, and subscribe to the podcast. What that does is it basically tells the platforms that this podcast is out on is that you like my stuff and I'm doing something right. So take a few seconds out of your day, hit that subscribe button, leave a rating or review. I would be extremely grateful. Also, I want to hear from you guys. So I want to hear some feedback. If you have any questions for future episodes, please find me on LinkedIn. Send me a DM, a connection request, Yona Weiss, and I'd love to hear from you.